Hey, Boris Musheyev here, and welcome to another tax strategy video on YouTube. So today I'm going to do something a little bit different. I'm going to share with you a live Q&A that I had when I was hosting a 4-day tax reduction bootcamp. Basically, we had over 500 people register for that bootcamp. A lot of people came and I held nothing back. I mean, nothing. Whatever they were asking me, I was answering their questions. And today I'm going to share with you how that Q&A went. You're going to learn a lot. We were talking about rental properties. We were talking about LLCs. We were talking about S-corporations. We were talking about safe harbor 401ks for when you for 401ks for when you have employees, and a lot more. So go ahead, tune in. We're going to start right away. Ready? Let's go. All right, cool. Let's do it. Can you amend the previous tax with a change of entity type? Change entity type retroactively. So David is asking, look, can I amend my tax returns if I change back to being, let's say, can I change back my entity type? I'm assuming from an LLC or S-corp, I'm sorry, from a sole prop to an S-corp, the answer is no. We cannot go back to amend that stuff. Can an S-corp owner that works from home deduct home office without an accountable plan? No, Nir, you need an accountable plan. Brandy, do these strategies work for LLC elected to file as an S-corp? Yes. Scott, how old do children have to be employed? I have 5-year-old and 3-year-old. That is a great question, Scott. So it really depends, right? So what can your 5-year-old do? Generally speaking, and honestly speaking, nothing that can help you in office. But can you use 5-year-olds and a 3-year-olds as a photo model, right? Baby model to advertise your services, run Facebook ads, whatever it is. And you can. I've seen it done. I had a client that did that, right? They had an optical store. So they took pictures of their kids with glasses, with kids' glasses, whatever that is, and they put it up in the store. Whatever they would have paid the other children model, they paid them instead. So, but generally speaking, you want to hire kids that can actually do work, right? Like, can they stuff envelopes? Can they, like, for example, if you've got teenagers, can they do social media posts for you? Because if you look for somebody on, what's that website? That freelancer website, then, you know, they charge like $30 an hour to do that, right? So you have to know, can you pay your children $30 an hour to do that? If your child is a teenager and can, why not? Let's continue. Can somebody claim Agusta while claiming home office? Yes, you can. How much taxes do I pay if I sell a rental property in less than a year after purchase? So George is asking a great question, and I'd like to use my whiteboard. And by the way, this is how I do my monthly Q&As. So this is a perfect example if you guys still thinking about enrolling, right? So, and sometimes I like to take a little bit longer to answer a question because I want you to understand what is really going on. So Jorge, right, said, how much tax do I pay if I sell a rental property that's less than a year purchase? Guys, here's the thing, right? Any asset, right, whether it is a rental property or even your stocks, right? If there's 2 types of taxes going on. So if you held the asset less than a year, less than 1 year, which is 12 months or less, right? Less than 12 months or more. Okay. This is a strategy in itself. So if you're looking to sell your rental property right now, and you can wait a little bit more than 12 months, right? 12 months or more, your tax bracket will be different because our individual tax bracket, the highest ordinary tax bracket is 37%. Okay. But because you've held the property for more than 12 months, it is considered long-term capital gain, and long-term, the highest tax on a long term is 20%, right? It can also be 15%, depending on what bracket you're in. So you will not pay more than 20% on the sale of your rental property if you hold it for more than 12 months. Same thing with stocks. If you guys own stocks, right? You held it for more than 12 months. Guess what? You won't pay more than 20% tax compared to this one. But it also depends what bracket you're in, right? So you might want to check that, but this is actually a great planning opportunity for you. Next one. Safe harbor 401k. I only have 2 full-time and 2 part-time employees. Do I have to offer it all? And how do I document this so I get deduction for my business if I open an account for me this year? I'm sure the 2 full-time won't participate this year. Do you want me to give you just an answer, or do you want me to give you an answer? All right, I'll give you an answer. Okay, cool. So here's the thing. So Pat is asking an excellent question. This is something we spoke about yesterday, right? So I've got a 401k plan and I've got employees, right? What if they do not participate? How do I document it? First of all, you have to give them, as far as I know, well, not as far as I know, right? When you set up a 401k, the part of your plan document should be something that you have to give your employees a written notice. Hey, we offer 401k. If you would like to opt out, okay? And yes, you do have to offer a safe harbor 401k to everyone, okay? To everyone. Yes, there you go. 2 of the full-time, 1 participate. There you go. That you can do. But here's the thing. Here's a tip for you, right? If this is your first time setting up a 401k, you can actually get a tax credit for opening up a 401k account and paying for it, okay? So the tax credit is $500 a year, okay? Now, it is if you have something that's called an auto enrollment, where you automatically enroll your employees and then give them a notice. By the way, I enrolled you in 401k, and like, no, I don't want it, and they sign out. Your tax credit will actually be higher for that to receive that. So if you do set up a 401k, for everybody that's here, if this is your first time setting it up, please make sure you let your accountant know how much you paid for the administrative fees, because you get a tax credit. Next, our sales are 6.4 million annual, and we are 2 owners. We paid W2 160 plus distribution. Is 160 too high? I think you asked that yesterday, Judith. I don't know. I really need to know. We use a software that identifies all your tasks that you do in the business, and it says what your salary should be. But based on the annual revenues that you're telling me, that's annual revenue. What is your profit, right? Next, Marshall, do we get up to 18-year-old child payroll without payroll tax? Marshall, yes, unless it's an S corporation. I've implemented all these strategies already. I need something bigger to lower my taxes. I mentioned this before. Are there any other strategies than this? Regular deductions and strategies. I'm talking about higher numbers. What do you want, Susie, from me? What do you want? Come to a Q&A call. I'm not really sure what is yes. The answer is yes, right? The answer is yes. How much can you take using the Agusta rule? How do you prove to the IRS that you are using the Agusta rule? Jenny, you've got a document, right? So you've got to look up at comparable rates. Like if you're going to use the Agusta rule, don't pay yourself $3,000 rent for one-time use, right? Like, where did you come up with these numbers from? Like IRS be like, all right, like I understand you had a meeting, right? For example, when we give Agusta strategy, we also give a template that says, hey, business meeting notes, who attended, let them sign in. What was the purpose of the meeting? What was discussed, right? Did you get the comparable rates? What were those comparable rates, right? So how much does your home go for an Airbnb for a daily rate, right? Or how much is a conference room around you cost that you needed, that didn't pay them, but paid yourself? Is tax amendment and filing for previous years are included? No, Raj, they're not. I overpaid last year. Can I go back and amend my 2020 to add some of the deductions you suggest? That I suggest? I mean, if you have deductions that you missed, not all tax, like for example, you can't go back and add Agusta strategy deductions or home office, right? But if you've legitly missed some deductions on credit card, you forgot to put some expenses from credit card or anything of that sort, you can go back. Sold assets for one of our businesses this year. Okay, good to know. Yes, Chris, they offered $297 extra, and they can amend and implement a 3-year implementation. Yes, but we do not amend for $297 for 3-year look back, right? We just review it and let you know. Can an S corporation owner take self-employed health insurance deduction on their personal return without doing it through the company's W-2? If yes, is there a difference? They cannot, and yes, there is a difference, because you will also save on self-employment taxes. Do they have to be a full-time? Kelly, is that a follow-up question? Let's see, what was your question before? Yeah, I'm sorry, Kelly, I don't see your question, so I'm not sure who are you talking about. Do they have to be full-time? Guys, you have to understand, I don't have the Q&A feature on this thing, so I'm really just going off the chat. Give me a second. Okay, $400,000 net profit. Net profit for both, Judas, or for each? Just put in the answer, I'll get to it. Do you have an Excel or Google Sheet to enter expenses by tax deduction category? No, Sheila, like we used to a long time ago, but we don't, because the software is so cheap right now. Like QuickBooks Online for self-employed is like $10 a month. So Susie, yes, Susie will get to you. All right. Susie, guys, by the way, guys, Susie's giving me a hard time because she enrolled. And he's like, Boris, I know some of these strategies. What about like if I'm making like $100 million, right? Come on a Q&A with me, Susie. I don't think this is something that we can discuss here since you already enrolled, right? So are there any significant tax deductions for implementing medical benefits for employees? Scott, significant tax deductions. It's a tax deduction, right? So think about it this way. For every $100 that you pay for your employees' health insurance, right? For every $100 that you pay for your employees' health insurance, right? For example, and if you are in a 30% bracket, you save $30. So you will still be out of pocket $70. Should you offer health insurance to your employees, if that's the benefit that you offer, you want to offer that, right? The question really becomes, a lot of business owners that I work with, they're like, Boris, group health insurance is really expensive for me. And not all of my employees are going to participate. And if I do group, it's really expensive. Can I reimburse them? Guys, by the way, pay attention to this, okay? Can I reimburse them if they get their own health insurance from the marketplace? The answer is you can, but you can't just give them the money to do it, because what happens is that there is a stupid rule. I promise you, it's so stupid that if you don't have what's called QSARA, right? Qualified Small Employer Health Reimbursement Arrangement, you get penalized up to $100. No, $100, not up to $100 a day per employee. Ridiculous stuff. Anyways, so QSARA basically says employee gets to buy health insurance on the marketplace, right? And maximum that they can spend. What was the amount? Hold on a second. I think it's $5,350 per individual plan, and $10,700 for family plan. And if you want to provide that, like we in my company, we have QSARA. We do not have a group health insurance, because group health insurance in New York, it's expensive. So I tell my employees, guys, if you want to get your own health insurance, sign the plan document for QSARA. We provide that in our program, right? Sign this plan document. And what we're going to do is that, you can reimburse up to this amount, right? Up to. So when you reimburse them, all those reimbursements are tax-free and payroll tax-free. So let's say you have your policy, your company policy says, dude, oh, do that, right? Employee, right? We're going to reimburse you $400 per month. So $400 per month, no payroll taxes, payroll, and no income. No income tax. So straight check, bam. They come in, they're like, hey, by the way, this is, they give you a receipt. You have to follow QSARA rules, is that they have to submit every 30 days. I think it's every 30 or every 60, not sure. Submit every 30 days, and then you reimburse them. Okay, you reimburse them. Is that good? I don't know if you guys have any questions on the follow of this, because if I go down in my chat, I'm going to lose everything. So bear with me, please. All right, cool. Let's see. I am a physician working locums in different state. I have applied for S-corp. How can I register in the state of Oregon for payroll taxes and register my entity? I think you asked this yesterday, Satya. So here's the thing, guys, right? Live here, work in Oregon. Right, now if you live here and your S-corp is here, right? If you live here and your S-corp is here and you are working in Oregon, you are just a W-2 employee, right? That is commuting to Oregon to work, okay? So you have to withhold taxes on your W-2 in Oregon State. So I don't know what state you live in, but this state is also going to tax you, but you're going to get a credit for it in this state. This is as much as I can explain based on limited information that I have from you. Okay, cool. Let's continue. Boris, I said that. Can part-time employees get 401k? Kelly, I think in order for them to qualify for the a 401k, they have to have 1,000 advisors, 1,000 hours a year. So speak to the financial advisor when you're setting that up. Can an LLC filing as an S-corp take a deduction for retirement contribution to Roth IRA and the company expense for the owner? No. So Kathleen is asking an excellent question. Please, guys, pay attention to this one, okay? Pay attention to this one. Okay, so Kathleen is asking, I have an LLC, right? And I'm filing as an S corporation. So we have established now that she's probably the single member LLC, right? Single member LLC, and she has an S corporation. She takes a W-2 salary, most likely. If you're not, you should be taking a W-2 salary, okay? But she's like, if I open a Roth IRA, can I fund it through an S corporation? First of all, Roth IRA contributions are not tax deductible. Just Roth IRA is not tax deductible. Second of all, Roth IRA, individual retirement account. IRA stands for individual, okay? So that means, no, you have to do it personally, from the personal money. But if you say, oh no, Boris, I already paid for my S corporation, what do I do? That's okay. Just record it on your books as distribution, okay? It's not an expense to the business. Guys, I explained yesterday, the Roth IRA is an awesome retirement vehicle. Why? Because you can put the money in, you don't get a tax deduction, but everything there grows tax-free. Cool.